Well, good afternoon, everyone. My name is Bill George. I'm a professor of management practice at Harvard Business School. And this session on the future of market capitalism and how do we rebuild market capitalism, I think will prove to be a very interesting one with some quite different points of view from a group of panelists representing very diverse points of view in diverse parts of the world. I think we can safely say that after the global meltdown of our economic system in 2008, that we're at a crucial turning point for market capitalism. And there's been intense discussions about that in the last year, but I think we arrive at this point with more questions than answers. George Soros, 2 years ago here, said we need a global sheriff. I think that's one of the questions for us. Do we need some system of global regulation? And now in January 2010, I think we're at that crucial point. And I think we have to ask ourselves some question, was the global economic meltdown an indication that unfettered market capitalism as being practiced in that time has failed us? Are there better models emerging in some of the developing world with more centralized control over capitalism, stronger government control, greater use of sovereign wealth funds? And with the high velocity of funds flow today in 24-hour markets, do we need a global regulatory body that can bring people together on short notice or set a framework for the long term? Fourth question I have is for our panel is what's the impact of the shift from what has been predominantly a unipolar world out of New York and to London to a multipolar world where we have many financial centers these days? And then finally, are we at risk of putting in excessive regulations and overreacting to what's happened that might lead to lack of investment, lack of innovation, lack of creativity that might result in unemployment staying at their very high levels that they're at today? So with that introduction, I'd like to ask each of our panelists to comment on some questions just to get us going for just 3 or 4 minutes, and then we will move into the debate discussion, and then at a certain point, I would like to ask the audience to join in with any questions that you may have. So, Ben, I'd like to start with you. And you were quoted in the morning paper talking about cohesive capitalism. But I'd like to ask you, what's your assessment? What is the root cause, as you see it, of the problems we got into? Because I think we need to know the root cause before we can get out of the problems and come in with solutions.
Yeah, thank you very much. And I believe this is the second year of Davos that the majority of the discussions is about bankers and bonuses. And I think it is time that we move beyond the bankers and the bonuses, because really we have 3 crises. We have a financial economic crisis that is, I think, much more than just the bankers and the bonuses. We have a financial economic crisis. We have an energy crisis, or a climate change crisis, and we need to get on with that. But most important, we have a leadership crisis. We have a trust crisis. You could ask yourself why, if people have lost so much, we haven't seen more of a backlash of what's happening. And I think we run the risk of that backlash unless we listen. Mm-hmm. Capitalism is great. Capitalism gives each and every individual the opportunity to develop themselves to their maximum, to create value for themselves in their environment. But if you add all these individual capitalistic persons and you put them into an organization, it is simply not enough to challenge them to increase their earnings per share. Mm-hmm. You have to challenge them to contribute to society in which they operate. Mm-hmm. And that's what I call cohesive society, therefore a cohesive capitalism. You have to contribute more than just adding up the numbers. Mm-hmm. And we need to do that against the background that I see that we have delegated the negatives of this crisis that we have to the next generation. Mm-hmm. We have shamelessly borrowed from our grandchildren. I'm a grandfather. I have to look them in the eye and say, we have shamelessly borrowed from you. And by the way, we have consumed it. We have not invested it, we have consumed it. And in addition to that, if you look today to employment, very interested to hear what my colleague here has to say. We protect those in jobs. So we protect the 50 years and older because they are organized labor. And we have youth unemployment For example, in Spain, 42%, in the Middle East, over 40%, an unsustainable model. So this is the picture we're in.
Thank you. And Guy Ryder, I'd like to turn to you next. I think that's a perfect place, a starting point for you to offer some comments. How has our system of capitalism affected, if you will, the working people of the world? You represent 170 million of them, and you also know how to run a confederation. But what are the implications for this with how we look at the financial world?
Well, two comments on your question. How has the global capitalism affected working people, let's say in the last 18 months, 2 years? It's cost them 34 million jobs. It's put about 150 million more people into extreme poverty. And it's ruined a lot of people's lives. It's quite simple. But over 2 decades, not 2 years, what the model that we've seen in operation do is create very lucrative returns to some people, but it's basically exacerbated growing inequalities in our societies that we have been signalling up for 2 decades, not for 2 years. And we believe that, even in the absence of the crisis of the last 2 years, should have been source for concern. And I think it's a matter of deep regret that it basically passed uncommented upon or without much concern in debates such as this one. Let me return to what Ben has just said. I thought he was going to say something I was going to agree very strongly with, and then he didn't. We don't just have a financial crisis. I agree. We have an energy crisis. I agree. We have a leadership crisis, and I'm going to steal your line, Bill. We have a subprime problem, subprime leadership problem. But I thought you were going to say, and you didn't, Ben, we have a social, an employment, and a job crisis, and you didn't say it. And that is what we have today. We have a job crisis. We have a major social crisis. And yes, that does reflect in the backlash and the crisis of confidence. So I agree with where you finally got to. And the question is, how are we going to react to that crisis of confidence? Now, people want to see, and I think there's been an absolutely major sea change in the last year, people want to see change. They want to see a major change in the basics of capitalism. They want to see regulation. They don't want to see excessive regulation. Nobody ever wants anything excessive. But they want to see things that work, and they want to see things that make a difference. They want to see, I think, the building of consensus around desired outcomes. That would be a helpful debate. And then designing of machinery to bring those outcomes about. And I think what they don't want to see, and I'll finish here, what they don't want to see is a sort of burgeoning nostalgia for getting back to where we were 3 years ago. I mean, those of us who were here in Davos 12 months ago, I think I personally was rather shocked by the type of language I was hearing from the business community. Greed, excess, we made mistakes. You couldn't find anybody who said that I was greedy, I made a mistake, but everyone was agreed that it had happened on the aggregate level. Quite an interesting logical conundrum. Now that's gone. I'm not hearing that language here. What we're hearing now is, well, you know, we're pulling out of the worst. We can survive. Survival is no longer the issue. And the back to business as usual is being developed as an option and strongly defended by some. That has to be put aside, or else the backlash and the crisis of confidence will only deepen.
Mm-hmm. Thank you. Next, I'd like to turn to His Royal Highness Prince Salman of Bahrain. And I'd just like to ask you, have we gone too far in focusing on free market capitalism? Are there other systems that need to be thought through in the world we live in?
Well, let me start by asking a very simple question. From what I'm hearing, I don't think we are deciding whether it is capitalism versus another system. Mm-hmm. It is what kind of capitalist system we would like. Having grown up in a region of the world where 300 million people were disadvantaged because states relied on central planning and inefficient means of ascribing resources to projects or to endeavors, I cannot but be very strongly in favor of a capitalist model. However, we have certainly seen a crisis of regulation that has put us in these dire straits. Fundamentally, it revolved around the accurate pricing of risk, And without the accurate pricing of risk, a lot of people made mistakes that they shouldn't have. So how do we protect ourselves from this in the future? What are the new ideas that are emerging? If we talk about a crisis of energy or a crisis of, or a financial crisis, we must recognize that nearly up to 40% of the world's GDP is either energy or financially driven. So this is a very significant sector. It's not one that we can just assume we can magic away with magic cures. We really fundamentally need to sit down and decide for some very important issues, i.e., do we need a global regulator? Do we need a global regulatory framework? Do we need better national regulation? How do we handle state power versus global responsibility? And fundamentally, if we are to return to the level of the individual and the worker, how do we empower people who are affected by natural upturns and downturns in a capitalist system to rise above and succeed and maybe reinvent themselves in ways that they hadn't thought possible? So I would turn to education and training as being a very fundamental thing that is hardly discussed. We don't talk about how we give people new skills in a very significant manner. If you lose your job, you're expected to find another one. Now, are there enough programs? I know there are some programs. Are there enough programs to help retrain these people? Are we putting enough resources into these programs? So at the end of the day, I must come out in defense of capitalism. It is the one system that has consistently driven standards of living and driven productivity, which is key in all of these issues. But unfettered capitalism without any ethical or, let's say, prudent controls becomes one that invariably leads to ruin. I would be happy to hand it over and maybe delve deeper into those subjects.
Okay, thank you. Our next panelist is Jacob Wallenberg, who's chairman of Investor SA, or AUT. Jacob, maybe you can pick it up on that. And how do you look at the system? And do we need some systemic framework here? And where should we go to deal with some of the systemic risks we've seen out there?
Well, if you allow me, Bill, to take a slightly broader approach and maybe at least kick off by asking the question, what have we learned from the global problems we've seen over the last 2 years? And that would suggest changes in the system of market capitalism as we know it now. And I think there are a few things that I've learned. Market failure of the financial markets has led to unprecedented coordinated political intervention, which I think is great and should be applauded. I really applaud the governments of the world. Obviously, depression, the style we saw in the 30s was averted. But of course, the recession has cost a lot, many jobs, as we heard. And ultimately, we see politicians under severe pressure to address all the issues of income inequality, pay gap, and so on. And for all of us that listened to the president yesterday, we can conclude that politics matter right now. Another thing that we've learned is that market capitalism is generally under threat for various reasons. On a more philosophical level, we have the Anglo-Saxon model, the basic market capitalistic system is losing popularity, and there are lots of fingers being pointing at the system which allows such excesses that has been responsible for the crisis. On a more economic level, state capitalism and government intervention, I think this is hugely important, have replaced pure market capitalism. And major companies and major banks are now owned and governed by states. So on that basis, if that's what we've learned, what are some of the reflections on what happened? Well, the first question is obviously, should we then redesign market capitalism? And I'll ask myself, if we define market capitalism as free trade, open markets, transparency, the rule of law, and property rights, well then obviously we should not change. If, however, we mean that we should refrain from some of the excesses, well, of course we should address that, but without changing the system. I think that is key. And that leads me to my second point, which is the question of trust that was mentioned before. We in business have a clear issue with trust. And I believe that business has to learn to communicate a lot more and a lot better. I think that we should not fool ourselves. I think that we have to do a much better job, and we have to be seen as socially responsible participants in society. And of course, and I'd like to underline that, I believe that generally speaking, business is. Mm-hmm. My third point comes from a shareholder perspective, which I read in the paper this morning was expected to come from me today. I represent a long-term business model, and we've been in business for some 150 years with a philosophy that happens to be very fashionable today, which is long-termism. And of course, I look at quarterly reports, but I don't like to only look at and focus on quarterly reports and performance, but I prefer to look at performance over longer times, over business cycles, as for us, better norms. On bonuses, popular subject these days, I very much agree that they are more of a symbol of the crisis rather than its core cause. I agree that some of the sums are extremely hard to justify, but in the overall scheme of things, I think it should be a side issue in the debate. And let me just underline that I agree wholeheartedly with the G20 principles on compensation. And as a shareholder, I'd also like to underline that I've never had an interest to pay anyone more than necessary. Mm-hmm. On bank bashing, another popular game, let me just say that bank bashing, I believe, defies the purpose. Yes, we need to deal with systemic risk, but I believe that we'll pay a price on economic growth. So to find a balance without overregulation, in my book, is key. And just to conclude and maybe give a sense of perspective, this year here in Davos, we all focus on market capitalism, as was mentioned. Well, let me just try to be slightly bold and predict that next year we'll be focusing on state capitalism and its impact on business and business practices. With that, thank you very much.
Thank you very much. Our next panelist is Dr. Tony Tan, who is head of the Singapore Investment Corporation. Dr. Tan, I'd like to turn it over to you, and you represent an interesting point of view, and one of the observations one might have is that the Asian financial institutions, Asian banks, did not seem to be affected nearly as deeply as Western institutions. Is there a reason for that? Is there anything that we can learn from the Asian experience over the last 18 months?
Thank you, Bill. I would like to look at this issue of market capitalism in the light of the events in 2008-2009. We went through a very difficult period, the worst recession the world has experienced since the Second World War. Indeed, if it had not been for the unprecedented stimulus by many governments, quantitative easing by central banks, I believe that we could easily have gone into another Great Depression. But fortunately, that was done, so we didn't suffer the worst consequences. But the point was that this Great Recession in 2008-2009 did not affect all parts of the world equally. I think the most severe impact was, as can be observed, in the United States and in Europe. Loss of jobs, slowdown in economic growth. Asia, by and large, although it also had an impact, was not affected as much. Economic growth did slow down. Unemployment rose in some countries, but not to the same extent as in Europe and in America. More important, Asian banks remain healthy throughout this crisis and emerged from the recession in 2008-2009 in a stronger position, in fact, able to expand their market share of world banking business. So I think one obvious example is China. Despite everything, their growth did not go down to zero. It dropped down to 8.9%, but that's manageable. And that's due to the stimulus which the Chinese government put into the economy. In the light of these events, it must be expected that Asian governments, central banks, and regulators must ask themselves whether the type of Anglo-Saxon market capitalism, which has, in a sense, been the norm for the last 30, 40 years, free markets, deregulation, allowing companies to regulate, so minimal state intervention. Is this the best model going ahead? One must expect them to say that some other model where the state plays a greater role seem to have weathered the crisis much better. They will probably continue to play a bigger role in the coming years. And therefore, I think that it will be the case that Asian governments, China, Southeast Asia, would have to re-examine some of the tenets of market capitalism which they had previously automatically accepted as being best practices. This is a great challenge for Asian regulators, Asian banks, because in a sense you are questioning first principles, something which has not been the case, which they had not had to do for the last 40 years. I do not mean by these statements that Asian governments will completely reject all the practices which Western governments and all the advocates of policies which have been the case for the last 20 years. But I do believe that they will re-examine all these practices again, and they will not automatically accept that what is advocated by Western governments, central banks, Western companies, automatically is the best way forward. How this will change and how they will advance their own economic interests, I believe will have a profound impact on world economic growth in the coming years. Thank you.
Thank you very much. Let me just pick up on that for the rest of our panelists. Do we, in this world of very high velocity, movement of money, very high liquidity, and in many sectors, very high leverage, can we depend upon the goodwill of national governments to operate, or do we need some form of either global regulator or some framework for global regulation? I just open that up to the four of you. Jacob?
I think generally speaking, over time, I'd like to see a global regulator, because otherwise we're going to see arbitrage in the system, as we, for instance, see within Europe today. So if we can find the correct way of dealing with it, and if we can develop in that direction, I think it would serve us all well.
I would like to say that there's also arbitrage within countries and within systems that needs to be looked at. So there is banking, and then there's shadow banking. Hedge funds in the United States today are unregulated, and we need to be thinking on what works, not just on how we do it or what we need. What are we going to do? Which models work? And in order to do that, I think the G20 needs to sit down and have a very serious discussion about their own experience and see where we go from there.
And do you think that the G20 is capable of bringing together some form of regulatory framework?
Absolutely.
And anticipating crises that may come?
Well,
That's
certainly
a little bit bigger question.
The bigger question. Capitalism has always been an imperfect science. The goal and the task must be to make it less imperfect. And we have the reasons for this economic crisis are different from the ones that have preceded in the past. And let me give you an example. In my country, when we pursued the for lack of a better term, Anglo-Saxon model, our economic growth jumped from about 3% to over 8%. And we didn't suffer from the effects of the global financial meltdown, largely because our banks had not moved into many of those very complex instruments that sank some of the largest financial institutions in the world. So, yes, again, there are good solutions. There are right ways of doing things. Sometimes it takes a downturn to figure out what you were doing wrong. The trick must be not to allow it to be as big as it was in this last cycle.
Ben, forgot to mention Ben is the chairman and CEO of Alcatel-Lucent in France.
So there are two interesting things here. First of all, we talk about regulation and whether we should have more regulation or less regulation, who should regulate. Perhaps we should talk not about regulation, but of desired outcomes. And regulation is not a meaning by itself, it's just a way to get to a desired outcome. There are two things that we need to realize. First of all, we live in a globalized environment. We do. There is no way that crisis or no crisis, you can turn it back. And to put passports on everything, on every aspect of our economic life, I'm not so sure is a great help. And the second thing is we are also interdependent. We were very much in a vertical reality in which you could have a sector that was totally not linked to the other sector, or geography that was totally not linked. We are all linked now. So whether we like it or not, we live in an interdependent global environment. So the choices we're going to make will be choices that will drive behavior. And the thing we talk about today is behavior. We bring it on the system level, but the reality is it's not the system. It's the behavior that's driven by the system.
Okay. Guy, do you have a comment?
I'm all too happy to join the consensus on the need for global regulation. I think everybody's spoken in favour of that. And the question is, I think, then, not do we need it or not, it's how do we get there?
Yes.
And I agree that the G20 seems to be...
What's there? How do we get where? Because
I'm coming. Where we are today is we don't have it. And we've got the beginnings, I think, through the G20 of some opportunities to build. Now, is the G20 a sufficiently strong foundation to build that framework? I think that needs to be explored, and we need to come to some determinations on that. I think it's also very healthy to be reminded that, you know, this Anglo-Saxon model is not universal. Others have fared very much better. Asia went through its crisis in the 90s, 97, and some things were learnt there and some things were done there. Could have been reminded that Sweden went through its crisis in 91, 92, and some very important lessons might have been learnt from that experience, by and large were not. Now, coming to what you're saying, Ben, I agree. We need to decide where we want to get to. We need to decide what the desired outcomes are. I really do agree with that. And I think we need to set our sights on that. One of the desired outcomes from a Labour perspective that I would like to put into the mix is that we need to have the financial economy better serve the real economy. Of course, we need to evolve the catastrophe of the last couple of years. That's very, very clear, and the excesses that brought it about. But we also believe that there's been a rather alarming decoupling of the role of the financial sector, finance capital for want of a better term, to the needs of the real economy, the productive economy. And I think we need to glue those things together. And one thing is something which Jacob referred to at the beginning. We need to get out of this short-termism, this demand for immediate short-term 15-20% returns from a real economy which is growing at 3%. Something has to give around that type of thinking. So those are some of the desired outcomes.
How do we get away from that? I mean, it is a fact of life today that there's enormous short-term pressures. There's the velocity of money, the trading is taking place all the time. How do we get to a longer-term, if you will, more of an investment perspective?
Well, as I said, we've been practicing this for a while, and we're not the only one, but there are not many others around. And I don't have a great answer to the question. I mean, if you look in my own country, the socialistic evening tabloid will once a month run a list of the best performing funds. And obviously, you have a right to move then, right?
Right.
Between different funds. So what's the rational behavior from a saver? That's, of course, to move to the best one. So you have this short-termism coming into the system from all kinds of angles, and also from all political angles. So I think we really have a significant issue on our hands. Would we desire to move towards more long-termism?
Of course, the assumption there was that historical performance, recent historical performance, is the best predictor of future performance, which
Right.
there's not necessarily backing up. Ben, did you want to
So
respond to that?
the reality is that we will be asked every quarter how we're doing, and we will be judged on our performance per quarter. That will not go away.
Yes.
So I'm not asking for that, because it's there. But it is about leadership, how you deal with that. You can give in, or you can stand above it and say, yes, of course, but in addition to this, we have other goals for the longer term. It's about leadership. It's the definition of success. No regulator in the world, I mean, you ask for more regulation. No regulation in the world can attach the issue on the definition of success. What makes me tick, why would I do things, has nothing to do just with what regulators tell me. It has to do with the value proposition that you make. We lived in an environment that we said to young people, whether you have studied economics, science, engineering, go to investment banking. They got the best of the house. So what was the story that we told the world, the young people? We told the young people, the only thing that really matters is next quarter. So I think it is about us looking in the mirror, not asking regulators to help us, and redefine as business leaders, as community leaders, as politicians, the definition of success.
So just to follow up on that, as CEO of a very major company, are you prepared to take your shareholders on that are demanding
I don't have to take them on.
short term?
I need to make sure that we do right, what's right for the profitability of the company. This is not either or. I just have added a little bit to the task that I think that I need to do. I need not to go to shareholders and say, give me a breather because I need to do all those other things. That would be ridiculous. But I will make decisions, and some of the decisions will be to the benefit of the corporation because they are somewhat longer term. If I can't defend it, they should get somebody else. And I think Jacob was 100% right when he talked about transparency. We need to come out and talk about it.
Dr. Tan, let me come back to you because it's general consensus that Asian companies and Asian countries tend to have a much longer perspective on building, investing, and 10, 20, even 50. The Japanese used to talk about 100-year plans. So what's your perspective on this question?
The organization which I represent, the Government of Singapore Investment Corporation, invests throughout the world. We have to study the trends in the various countries. Essentially, we have to try and discern what the world is and how the world will develop. In this instance, it would seem to us that the world will be a very different place after the events of 2008 to 2009, in the sense it will accentuate and accelerate a process which actually has been going on for the last 20 years. Moving from a unipolar world, which is the United States, setting the rules, and on the economic field, basically determined by the group of 7 developed countries. After what happened in 2008, 2009, I believe that we will move to a more multipolar world. Power, influence, wealth will be more distributed throughout the world. This is symbolized by, in a sense, the G20, I think, going to assume a more prominent role in determining how economic rules are set in world trade, in world finance. Does this mean that, what type of world does this mean? One must expect that in such a situation, there will be more consultation, but it will be more difficult to arrive at any consensus on what to do. Therefore, economic growth throughout the world will, in my view, slow down. We will not experience the type of economic growth which the world experienced in the period of the 80s and the 90s. There will be difficulties, possibly with more protectionism measures. Generally, from the investment point of view, we must expect to have lower returns. It's not a very optimistic prospect, but I think it's our duty not to see the world as what we would like it to be, but the world as we see developing in the context of what will happen. And there will possibly be more geopolitical conflicts because, in one sense, most of the countries in the world still have to depend on the United States doing the heavy lifting, particularly with regard to taking measures to resolve conflicts in hotspots around the world. The US is still, despite all its difficulties, the single largest, strongest military power in the world with the ability to project its forces on an unprecedented scale. But to sustain this military capability, it increasingly has to rely, for example, on some of its strategic rivals continuing to provide finance through the purchase of treasury bonds. In a sense, when you have a situation like that, when countries are rising, developing, it's not a stable situation. And I think that the world will be possibly a more uncomfortable place in the years ahead.
Thank you. Sobering point of view. I'd like to come back to Ben's opening statement because you were really challenging to whom does capitalism serve? And I think, in the United States at least, it's been almost an order of belief. The Friedman School of Economics said that you're there to serve your shareholders. And are we now getting into an area where we're really questioning, are we there really to serve society and serve our customers and in turn serving our shareholders, or is capitalism really there to serve its shareholders? Prince Salman, do you have a point of view on that?
Well, I think capitalism, I've said it before, I'll say it again, capitalism without social responsibility creates unsustainable situations that lead to either an economic collapse or social disorder. So, no, I think we must be responsible to people greater than just shareholders.
Mm-hmm. Jacob?
I'd like
you
to
represent a big shareholder in many holdings, but...
No, but I very much echo the Prince's view here. And I think, at least in my book, it's very clear. If you cannot deal with the different stakeholders, be that your employees, be that your clients, be that your shareholders or society at large, you're going to take a very significant risk. And so it's self-serving in a certain sense. If you deal with them well, you're going to be well respected, you're going to have a good chance of being out there and be competitive if you have the right products, and the rest is, so to speak, up to you. If you have a problem with your different stakeholders, one of them can destroy your business quite easily. I mean, look at the beginnings of the CSR discussion. Look at the Shell semi-disaster or Nike's problems, just to take two of the most well-known examples used in that context. They both learned, they both changed and went into a better future, but they almost ruined their businesses as a consequence.
Mm-hmm.
Has complexity ever reduced in a free system? I ask the question because I think we have to learn to live with the fact that these new ideas, these new instruments may be around for a while in one form or another.
Yes.
But on the other hand, and regulation is well and good, that determines what kind of instruments can come into play and how they're managed. But God forbid another economic crisis or another cycle. What have we put in place to help make the problem less severe? Today, as was mentioned earlier, we have sort of passed on the problem to future generations by expanding massive amounts of government spending. The result of it ending, I guess, sometime in this year are yet to be discovered. But is there something in, for example, President Obama's plan that has just been tabled? I mean, I'd be curious to hear what the panel's view is on that.
Any point of view, Ben? Ben, you want to take it, and I have a question for Guy.
So one of the things that I think Davos is very, very famous for is that we have the capability to bring together not just one segment of the society or a question, but everybody. And the theme to have a global redesign initiative is about how are we going to make in the new bipolar world, how are we going to make really decisions? I mean, if the view is that we're going to uncertainty and that we go to a world that is basically more unpleasant than we have seen before, and we have to rely on that, what we need most is not just concepts, but is a concept of how we're going to make decisions. The G20 was, of course, great. If you read Pittsburgh, it was a fantastic declaration. It was the end of World War II. It was the shift of power to the new reality. But since then, it's a pretty silent around what type of mechanisms do we have. So I think that a global redesign is something that we need to have in order to deal with the uncertainties that you have brought forward. And you have brought forward a truckload of uncertainties that I really don't like.
Guy, let me ask you the last question that I'll ask, and then we'll turn it over to the audience. And I think Ben commented this earlier, but there's been a tremendous crisis of confidence here, confidence in leadership. Every poll you see says people don't trust our leaders anymore. And there's clearly huge outrage against the bankers, but part of that, there's also tremendous frustration, a pent-up frustration. People don't have jobs. I come from an old-fashioned view that people don't have jobs, they're not going to be happy no matter how strong the welfare systems are. What's your point of view? How do we restore confidence in people that are actually going to have to run organizations that create, if you will, cohesive capitalism and successful capitalism?
But I think it relates to the comments that have just been made. I think everyone on the panel has said that capitalism really does have to demonstrate responsibilities beyond shareholders, and I absolutely agree with that. I think the problem that we've had, and again, it's not simply over the last 2 years, is that capitalism has not distributed its benefits in any way which I think the majority of the population would regard as fair or acceptable. Look at your country, Bill. What's happened to CEO remuneration compared to medium pay?
School teachers, yes.
School teachers. Pay, the United States worker pay has flatlined. I think it peaked in, the median pay peaked in 99.
Actually declined in real terms in the last decade.
And has then gone down. So, you know, there's clearly no, how can I put it, there is no buy-in to that type of model. And that's where bonuses do matter. I mean, you can argue that bonuses, you know, this is purely the populist, you know, banging on about, you know, excesses. It really is a side issue. It isn't a side issue. You can argue, of course, about the type of irrational or irresponsible behavior that bonus-based compensation produces. That's not my main point. My main point is that when, and we're seeing it again, the banking community is deciding that it is appropriate and reasonable to award itself these types of bonuses, we're representing people who are bargaining away what they struggled for a very long time to get. I mean, we're dealing with people, and they're responsible individuals, who are actually accepting pay cuts. They're working with employers to keep the enterprise going, to keep jobs in place, to keep communities afloat. Now, I think, look at the bonus culture through their eyes. You've got to fix something. Now, that isn't a diversion from your question. The question is, how do you actually get to make capitalism overcome the crisis it finds itself in, the crisis of confidence? And you've got to have, I know this sounds rather hackneyed, you've got to have the sentiment that both sides of industry and the financial community can work together to some type of mutual benefit. We don't have that right now because the benefits are so unevenly and unfairly distributed. So I think that's the hump I would say we have to get over, and it brings in many elements of the conversation that we're having.
Thank you for that. Let me open it up to the audience now for any questions that you may have. We have microphones, people roving. I have a little trouble seeing, but who would like to? Yes, there's a question right here.
Just a very simple question. Wanting to redesign.
Can you speak as loud as you can? We don't have.
To redesign capitalism, or do you want to redesign financial capitalism and leave industrial capitalism intact?
Comments, question, response from the panel? Do we want to redesign financial capitalism and leave industrial capitalism intact? Do we have to just redesign the whole system? Jacob?
Just to repeat my point from before, I think capitalism, market capitalism in its basic sense is sound and good. And then, of course, there are excesses, and we have to deal with the excesses. And this, today we talk about banks, and we talk especially about the compensation system within the banks. But in some cultures, you also have an issue around about industrial compensation. But other than that, I think the basic notion of market capitalism, it works as long as it's applied correctly. From time to time, yes, we will have issues, and yes, we will have to deal with them. No system is perfect, but I think this is the least bad system you can find if you wish.
So it's not redesigning, it's maybe a little bit of maintenance. And it is very important that what we do is to recalibrate the definition of success. You don't need to change the system. Because if you change the system, you also say, you poke in the eyes of those hundreds of millions of people that came from nowhere, and by globalization and by capitalism, are now in middle-class positions, are developing themselves. So I think it would be pretty arrogant from us to say, and now the capitalist system is also going to be at the garbage level. That would be totally unfair and unrealistic.
Prince Salman, you want to comment on that?
Yeah, again, I'd like to forget what, let's say for the moment, G20 can do as a regulatory body. Why don't we look at market mechanisms that make the system more stable? So the Obama idea of taxing based on levels of debt. That would be very market specific. You could very quickly identify where there was overexposure, and there would be a way of paying back governments for their increase in risk. Okay, that's one model. The other model, is there a way to trade securities in a manner that accurately gauges what people perceive the risk to be? Is there a way of containing certain securities within certain groups, certain classes of shares that could be traded by owners? I mean, let's not just think of this general philosophical argument of is capitalism good or bad? We all agree capitalism is good. The question is, how do we make, in this complex environment we live in, it more accurately reflect the picture that is actually going on? And that is, I think, where we fell down in the past.
Very good. Other questions from the audience? Yes, sir.
Thank you very much. I'm just wondering how, on a practical level, this global regulation will be designed. Is the mechanism within the G20, or is it beyond the G20? How will eventually the national legislative process pick this up in different countries at different paces and make sure that obviously that this particular design of this global regulation actually gets implemented over a period of time? And then in the end, who would police this? I mean, what is the entity that would actually ensure that these different patchwork of regulations that are coming in, and I'm sure every legislator would add its own flavor to this global regulation, how would you actually try and police this entire activity throughout its lifetime to actually get a practical solution in the end?
Well, that's a good question. I mean, you want to pick up on that, panelists? Do we need a global regulator like the World Trade Organization? Who's going to reach agreement? Is it the G20? Is it the G2?
Well, isn't this one of those great moments in Davos where you can fall back on the notion that we're here to think very freely? And so we brought forward a few ideas here about global regulation, but in all fairness, do we have answers to the exact practicalities and so on? Of course we don't. But I think the notion is, on one hand, yes, all the questions that were asked are extremely relevant, and you have to find solutions to them. But is that enough for not at least embarking on the road and testing it? Is this something that could be achieved? Because there are a lot of good things that could come out of it. Are you successful? But in all fairness, no, I don't have answers to those questions.
Okay, thank you. Guy, you have answers.
No, we don't, none at all. In fact, we had precisely this conversation before we came out, if we tell the truth, before we came out into the meeting room, and we sort of had the same embarrassed silence in our pre-meeting as we do here. But I agree with the sentiment that you're making. We don't know the answers to those questions. But I think the point is, and I think most political process goes in this direction, you identify the need, you identify the type of outcome you're aiming for, and then you start to construct. Now, I don't know if it can come out of the G20, if the work being done in the Financial Stability Board can actually set us on the right task. I think the FSB would benefit from a great deal more transparency and willing to interact, certainly with people like ourselves, and it's demonstrated so far. But I think, you've got to take these things forward. You've got to take them forward quite quickly, with a sense of purpose, with a sense of political commitment, and a certain degree of expediency, because the fear is that the task looks too big to do, so either you don't start, or you try to set yourself the sort of pharaonic sort of ambitions which take an eternity to produce results. And in the meantime, things happen.
But the political knee-jerk reaction is, it's like after 9/11. We need to do something to coordinate and to do something with a new institution. And then 2 years later, we discover, when there is another guy who wants to bomb a plane, that actually what happened was we have a new institution on top of other institutions, and the so-called coordination didn't happen. So if we go back into an institutional answer, I don't think that we are going to do the right thing. It is much more how we're going to make decisions than whether we create a new institution going forward. So maybe the question to the G20 is a question we should ask ourselves as well. Is it up to the G20, or is it up to us to provide the type of discussion platform and passion around it to come forward with suggestions made by ourselves? We have been extraordinarily passive. And then we have looked to those who react and say that is all wrong. So perhaps it is something that we need to do in a much more active basis.
And so maybe the global redesign that Klaus Schwab and others have started here can actually bring people together to actually come forward with some of those in a framework.
Why don't we ask? Instead of saying, will it happen or won't it, let's ask. Let's write a letter at this panel. Write a letter. And see. Hold on. Okay, sure.
Good.
I'll write a letter.
Take you up on that. One final question? Yes, sir.
Hi, thank you for your perspective. I have a slightly different point of view, so excuse my naivete if it shows. I'm a professor at a business school, very capitalist-oriented. However, Russ Akoff, someone who preceded my work a long time ago, wrote that the purpose of business is actually to improve the lives of their employees. And so if capitalists would take a rate of return commensurate with their provision of capital, and consider that most of the risk is actually borne by employees who spend a large amount of their lives getting ready to do specialist tasks, which may actually one day go away, and therefore they be jobless, while capital is relatively fungible and can be moved from one task to another very quickly, as we know from velocity of capital, etc. So Russ Akoff actually asked us all to consider the possibility that the role of business is actually not to maximize the return to shareholders, but in fact try to improve the life of employees. And I was wondering if the panel had any
Quick reaction from the panel on that? I can see guys agreeing.
Look, we know that productivity is what drives rising living standards.
Right.
And surely governments, corporations, and individuals want to have a better life for the people so that they can continue to grow, develop, and invest in new technology, new products, new instruments that make things better than where they were before. Now, if we assume that we can only hold public companies responsible or bankers responsible, but we forget that capitalism also means the small business owner and the sole proprietor and the inventor and the doctor and all the people who we live and interact with, then we're doing capitalism a great disservice. we must be committed to the system. We just must make it more responsive, and we must fine-tune it. That's the bottom line.
And I think we have seen your suggestion in action. It's called General Motors. That was an organization that has as its main goal to keep happy employees.
Well, there's 2,600.
I might just add to this that in my former company, Medtronic, we had a sole goal of improving the lives of the patients we served, and we found that that did very well on behalf of the employees, as it did with the shareholders. So
Sure.
Let me just ask each of you, starting with Dr. Tan, for a quick wrap-up comment, if you would.
This meeting in Davos, and I think that in the last few months, the topic has been very much about regulation, how to transform regulation, what new regulations are needed to improve the financial system, to improve market capitalism. I think all of these require serious study. These are very difficult questions. I am always wary of the sentiment that one has to do something. And perhaps one principle which regulators and those who advocate changes should keep in mind is, I think, the first principle of Betson, that you should do no harm.
Thank you. Jacob?
Well, I think what is it we're experiencing? We're experiencing a cycle. And sometimes in cycles, the regulator and governments will come into play. That is just the nature of the beast. I think that this will change. I believe that the pendulum will swing back, and we will be back in a more normal fashion. And I'm very much looking forward to next year's discussion on state capitalism.
Good. Thank you. Friend Salman?
I agree wholeheartedly with that comment. I think I've said enough. I'll be happy to know.
Guy?
Well, I think the message from the panel is that those who are interested in making capitalism work is the best option available. Those who are interested in maintaining an open global economic system, and I would join in both of those views, have an interest in acting expeditiously to regulate as regulation is required, to make the type of major changes in mindset, the types of political initiatives that are now required to ensure that capitalism and globalization can endure. It does not lie by going backwards, looking over your shoulder and saying, how quickly can we get back there? That's not the nature of the cyclical type of evolution, I think, that we've been talking about.
Ben?
I wonder what most people will have thought listening to this discussion. I wonder whether not most people would have said this was quite interesting for a bunch of men, middle-aged and up, sitting in a podium in Davos. What has to do with my world? And I think it is the reality of my world that will drive the discussion of next year's Davos more than state capitalism or whatever phrase we have. I'm afraid that we need to do something. Doing nothing is not an option. If you have 42% youth unemployment, it's not to protect those who have. It's to create opportunities for those who have not yet.
Well, I think that's a good place to conclude our panel. I think that's a good summary that we have seen. I think we've agreed that we've seen. In fact, we've had a lot more agreement here than I thought we would, coming from such diverse perspectives, in spite of the fact we're all men. But I think, that we've seen that market capitalism has done enormous good for the world and brought many people out of poverty. I think we're pretty well agreed that we're operating in a global world. I don't hear anyone here arguing for moving to a more protectionist or a more state-centric model. That we operate in a global world, we operate in a global labor market, we operate in a global financial market, and we need ways of pulling people together, whether it's the G20 or some other vehicle. But we don't want to go too far in constricting activities to the point where we dampen down growth, as Dr. Tan said, or that we stop investment. That we need the investment in order to provide good standards of living for people around the world. And it's only through the capitalistic forces that we're going to have the investment required to do that. But that gets to the fundamental question. When we look at the long-term versus short-term, I think we're agreed there is going to be a lot of short-term trading and a lot of short-term activities going on, but there needs to be a long-term set of goals here. And that really gets to the heart of the question of the matter, to whom does market capitalism serve? And I guess my own conclusion, I would put a point on that, is to say that it must serve all the players in the system. If it only serves the bosses, if it only serves the shareholder, what I pejoratively call the shareholder of the last 5 minutes, it cannot work. It has to serve everyone in the system. It has to serve, by definition, corporations are chartered by societies, and they have only a reason for existence. And we're seeing the United States are pulling back on some of those charters. And so I think we're moving now to a situation where capitalists are realizing around the world we need to have ways to work together so we can serve all the players in the system, the customers, the employees, and ultimately the shareholders. And in that way, we do serve societal's end in making a strong market capitalism system. So I want to thank our panelists for coming today and thank the audience for your participation.